Now, going forward, I've called on Congress to give regulators the tools to hold bank executives accountable, and I've called on regulators to strengthen regulations and supervision of large and regional banks. And folks, we have to make sure that we're not back in this position again.
Well, they already had the tools. That's the key point. And the Federal Reserve failed, but now it wants more power and more regulation. And, of course, they're blaming Donald Trump for everything, just like the Bidens always do. I don't like it one bit. Joining me now, John Carney, Breitbart economics and finance editor and co-author of the Breitbart Business Digest, and Kevin O'Leary, chairman of O'Leary Ventures, Shark Tank investor, and author of Cold Hard Truth on business, money, and life. I mean, Kevin O'Leary, this report that the vice chairman Barr put together, it makes mention, oh, by the way, the Federal Reserve Bank of San Francisco examiners didn't really examine. I mean, it's there, but then he just comes out and says, but we got to have more regulations, more red tape, more costs. What do you make of that?
Actually, that report is quite damning because it basically says that there's lots of adequate regulation already in place, but virtually none of it was abided by in the case of three of these banks that have gone under. And so it's not a matter of more regulation, it's abiding by the existing regulation that isn't happening right now at the overseeing of the board level, or in the case of what happened in San Francisco with First Republic and Silicon Valley Bank, the Fed in San Francisco. And so rather than pile on more regulation that we still won't apply, let's apply the ones that we actually have already, is what most people that are watching the banking sector, including me as an investor, are saying. What happened here? Lack of oversight at every level.
Kevin O'Leary, let me just ask you a follow-up. This First Republic story really hasn't gotten, I think, the daylight it deserves for their bad investments and their also bad mismatched liabilities and assets and so forth. But I don't know if you have a thought about this or the JPMorgan takeover. But, Kevin, here's what I just have to ask you about this, okay? You know, we've been friends a long time. I got to ask you. Mark Zuckerberg, the head of Facebook, or Meta, whatever it's called, got a $6 million mortgage with a 1% mortgage rate, okay? $6 million mortgage with a 1% mortgage rate. I mean, I think on that basis alone, the bank deserved to go down.
You know, Larry, I'll tell you something about First Republic. I'm speaking now as a shareholder of JPMorgan, and not a happy one today, and here's why. This bank was the envy of many others because of these jumbo mortgages where rarely the Zuckerberg-type clients never defaulted. And so they were very prestigious, obviously, but also these loans were good most of the time. The reason First Republic failed was idiot banking management, poor judgment, and what they did to their balance sheet, not because their clients welched on their loans. The bank was managed by idiots. And so the question I have now, and this is what everybody should be thinking about across the country, if I'm a shareholder in JPMorgan or Bank of America or any of the money center banks, am I going to be force-fed all the idiot banks? Is that going to happen to me? The Fed's going to call me on the weekend. It always happens at Saturday at noon, saying, look, you got to bail out the Zortmaster Bank in Arkansas. You got to take out the bank in Texas. You have to eat this garbage. You own it. Because that's really what happened. This is of little value to me as a JPMorgan shareholder. It's virtually not going to move the needle at all. It's a pain in the rear end in terms of consolidating this, and all of this because of idiot management. Why do I have to pay for idiot management over and over and over again? That's the hue and cry that you're going to start hearing pretty soon. That's why we've got to fix this system. 15% of those 4,500 banks are probably run by idiots. Do I have to eat them all? Or should the government eat them? Or should the shareholders eat them? Or the people that actually have their deposits there eat them beyond the 250,000? These questions have not been answered, Larry, but I'm already full. I have indigestion with my shares of JPMorgan. I can't eat any more garbage banks.
I get it. I get it. In fact, John Carney, I think there's idiot management throughout Washington. I mean, I think that's one of the problems, too. Now, John Carney, I just want to, this may not be the last. I mean, the Federal Reserve is not done tightening the screws on credit conditions. They're going to raise rates again this week. People are saying it's one and done. I'm not sure. I mean, in fact, I don't believe it's one and done. I don't think they're going to increase their balance sheet. I think they're going to shrink their balance sheet. And I'm just wondering, are there other shoes that might fall, John Carney? Is that a risk out there? More financial blowups?
Absolutely. I mean, I'm sorry, Kevin, you are going to have to eat more of this. This is not going away at all. We are going to have more. Yes, First Republic had problems, right? But it is not the only bank that is running into problems. All of the banks that expanded their balance sheets extremely large during our 0%, more era, are now running into big problems. And so that's what happened. So yes, it was a problem for Silicon Valley. It's a problem for First Republic, but it doesn't end there. We are going to see other banks run into these same problems, which is that they made a lot of very inexpensive loans, 2.5% mortgages, and now mortgages are 7%, right? So this is a big problem for them, and it's going to be a problem for their funding costs are above the cost of what they're able to raise in their interest rates. So they're going to be destroyed, and it won't end here. It's going to be, yes, Silicon Valley Bank, now First Republic. It's going to be another one as well.
Kevin, just as a wrap up, you're not happy. You're not digesting your JPMorgan stock very well. Why'd they do it? What was the rationale for this?
I think there's an intrinsic ownership of the FDIC insurance with the money center banks. In other words, people don't really understand the FDIC insurance. People say, oh, it's not taxpayers' money. Yes, it is. When you pay fees at a bank, a portion of it goes into the FDIC insurance. And so the banks pay for the idiot bankers. Idiot bankers are turning out to be very, very expensive just for the FDIC insurance, which you actually funded as a fee payer in a bank, the banks themselves. But now, if you're Jamie Dimon, it's a headache. You're going to get a call next week from another small regional bank. Somebody at the Fed's going to say, come on, step up, save this situation. You're a leader in the banking industry. There's an imputed responsibility there. And I think the risk Jamie has, and all of the CEOs of the money center banks, at some point, is there a shareholder revolt? I personally feel that we've done our duty. We ate garbage. Now we have to digest garbage and get it through the system, like a pig through a python. No more garbage, please. Let someone eat the next piece of garbage.
Boy,
I'm very surprised that Jamie Dimon went ahead and purchased this bank. They got sued so much because of Bear Stearns and because of all the acquisitions they made in 2008. I thought they would have sat this out. I thought they would not come in at all, and they did it. I would be very wary. The stock went up on Friday, and I would be very wary if I was a shareholder of JP.
I would only say, as a generic matter, there's too much garbage out there. That's all. You can apply that rule to whomever and whatever you want. I don't have time to go through the list, but there is too much garbage. And I would just say, save America, stop the garbage. How's that? Kevin O'Leary, thank you ever so much. John Carney, thank you so much.